Hello everybody. Today we're going to talk about money. Money that we already have, what to do with it. It's getting to be tax season and people are going crazy right now trying to figure out what to invest their money in. Bitcoin, Tesla, or should you just go to Vegas and put it all on red? I've been getting a lot of questions on Instagram, Patreon, and email. The best ways to get in touch with me are on Patreon or send me a direct message on Instagram. So people want to know, what are you doing? What are you doing in 2021 with the money that you made in 2020? The strategy and the plan is the same as it was in 2020. 2018, I started a money market account. That money market account was a short-term savings account for a new truck and to pay off my rental house. And I also put money there to pay taxes. Even though I pay quarterly taxes, I make more every single year. I even make more than the estimated taxes. So my accountant, he says, okay, I estimate that you're going to make this dollar figure next year because you made this dollar figure this year. So your quarterly taxes are going to be $24,000. So I pay that every quarter. But it comes time to actually pay your taxes, and there is a difference. And that's okay, just as long as you were paying your estimated taxes. That's the money market account. Keep in mind, this is all pre-pandemic. So I was saving like crazy. As soon as I would get the money, I would get rid of it and put it into this money market account that was not part of my bank account. So I get the checks, I get the deposits, it goes into my business checking account, and I transfer it to this money market account. I have it through Edward Jones. I know people don't like that, but we can talk about that later or in a different video. I was saving halfway through 2018 and all of 2019. A lot of money in there. I'm getting ready to pay off the house. And all of a sudden we have the illness. Careful what you call it these days, or although they'll ban you like that. So the illness comes along and the stock market crashes. And I decide not to pay off the house this year, but to go into the stock market. My first time really going into the stock market. Previously, all my investments were in retirement accounts. We'll get to those basic retirement accounts and investments a little bit later in the video. A lot of you know some of the stocks that I bought. Some of you probably remember more than I do. Some of the ETFs. One of them was an iShares. I bought Disney, Halliburton, Tesla. There's a whole bunch of them I have. Probably more single company stocks than I should have. But I got them low. A lot of them have doubled. Some are even more than doubled. I don't suggest you get your stock picks from some guy on the internet. You have to do your own research, and if you don't want to do it, you have to pay someone to advise you on those investment decisions. That's what I do. I don't have time, and I don't want to make time to learn the stock market. There's just too much out there, and I'd rather do different things, like build electric mountain bikes. That'll be on the SSTC. Maybe you've only been in business for 2-3 years and you haven't had the time to build up a lot of work and make a ton of money. There are some things you have to force yourself to do as far as saving for retirement. An individual retirement account. I just started a SEP IRA. There's Roth IRA, there's traditional IRA. Google them. One is tax deferred, one is post-tax dollars, meaning you've already paid tax on that money, it goes in there. In the SEP, it's a sizable amount of money. Those IRAs, you can only put like $6,000 in a year, depending on the year. It goes up every year by a little bit. But an SEP IRA, you can put in 25% of your income. That's a big chunk of change to reduce your taxable income. Now, once your money is in an SEP IRA, you have to buy something with it. I just happened to buy some Microsoft with mine and a couple other mutual funds and ETFs that I've already forgotten what they were. I have an advisor that kind of helps me out with that sort of stuff. So those are the basic things. Going way back, I started out at $300 a month going into a traditional IRA. I didn't have a truck payment. I said, okay, this is about the size of a truck payment. If I had a truck payment, I would figure out a way to make that truck payment. So what I'm going to do is put it into a traditional IRA. And that didn't even get me to the limit. Got me like $3,600. Wasn't even the limit for that traditional IRA. Year and a half later, I could actually bump up my monthly contributions and get to the limit. There are two things I got to talk about next, and it comes from the comments on this YouTube channel.
Don't give that money to the IRS, Handyman. You go out and you buy yourself some new tools. You go out and you buy a new fancy pickup truck. and you just spend that money on the business. You got to reinvest it into your business, Handyman.
In some cases, that's exactly what you should do. If you are trying to grow a business to have value, to sell, and that's when you cash in, you should be investing into that business. Mostly marketing to get enough work to pay for the growth. But on this channel, we are all about self-employed dudes fixing up houses. We're not trying to build a giant company to sell. Oh, another one is...
Handyman, don't you report that income. You keep that cash. You stuff it under the mattress. You keep it. Don't give it to that IRS. Don't give it to the man.
I get that one a lot, is don't report it, keep it cash.
Cash is king, Handyman. How do you not know that? Cash is king.
So compounding interest over a length of time, 10, 15, 20 years, will pay you more than you will pay in taxes. And oftentimes, it'll pay you millions more than you pay in taxes. If you start young, you start early, as young as you can. I'm starting my kids out, and they're not even knee-high yet. We'll talk about that kid stuff in a minute. The longer you can take advantage of compounding interest, the more you win. The more money you have over keeping cash. It doesn't take long for that compounding interest to outpace the taxes. So here's something else to focus on, or that I focus on. You don't have to do anything I tell you. Don't do anything that I do. I'm just sharing what works for me. And one of the things I've been focusing on the last 2 years mainly is delayed gratification. One of those big delayed gratifications is I want to go out and buy my own fixer-upper house. I want to go out and buy a mid to early 90s house in the suburbs that has never been remodeled. Still has that tiny little concrete stoop on the back porch and the front porch. Has Formica countertops, vinyl flooring, brass light fixtures, builder grade everything. I want to do that. I want to set up a studio. I want the lights. I want good sound. And basically I just want to go to work at that house, fixing it up, making YouTube videos every single day. But I'm not going to do that. I'm paying off the rental house first. A big factor is what we just went through, the pandemic. I got lucky that I was not affected by the government shutting me down. But there was a lot of hardworking businessmen out there that were forced to shut down and could no longer provide for their family. If they didn't have any bills, it would have been easier to get through. So what I'm doing is I'm taking away one mortgage payment and increasing a rental income, because it's not going back out the door to pay for the mortgage. And that's me kind of looking more towards my family if I were to get in a car accident and I blow up into, but yeah, say I were to pass away and I don't want to leave my family with any financial bills. So I want to make their life as easy as possible if I die. This kind of goes along with delayed gratification, but once you become a parent, it's really not that difficult. Filling up your kid's college fund, once that's filled up, start them a trust fund. That's how I'm doing it. I don't know how I'm going to give it to them or how that goes, but it keeps me going every day. So they will have a free education. Hopefully they'll be millionaires by the time they graduate college. And if they want, they can go be a zookeeper and not have to have any sort of financial burden. Cryptocurrency, that's a big hot topic. I don't know anything about it. I own some of it. The money that I have in it is basically gamble money. It is just to see what happens. I set limit buys. It goes up, it goes down, it goes up, it goes down, it goes up, and it goes down. And those up and downs are often 15, 20% or more, 30%. That's a lot of percentages to make on your money. I'm gambling. It's like a casino to me. I don't try to get the lowest of the lows, and I don't try to hit the highest of the highs. You can get lucky once or twice, but usually you'll miss it. I think that's it for now. IRA, SEP, if you are just getting started. Don't get stock tips from a guy on a handyman business YouTube channel. I gotta say this again. I'm not telling you what to do. I'm just sharing what I have done because it's been asked millions of times. Maybe not millions, but at least 1,000 times over the last 6 to 8 months. I've gotten messages asking,
what are you doing? What are you doing? What do you think of this? What do you think of that?
Thanks for watching. I got some more videos coming up. I got to give an update on the furnace. My lovely propane-powered furnace. Got something cooking over there. Major announcement coming for the main YouTube channel. That's called the Handyman. Big projects, huge projects. None of these little silly handyman gigs that I've been doing. I've been dragging my feet. I've been cruising the YouTube thing here, and I got to get back into doing some real work. Goodbye.